The market's traded weaker today, most of the day. However, as we can see in the Dow, it closed right back up smack dab on the T-line. A very simple rule of the T-line. If you see a candlestick buy signal and a close above the T-line, you're in an uptrend until you see a candlestick sell signal and a close back below the T-line. As long as it closes above this T-line, which is a very important trend indicator in conjunction with candlestick signals, the probabilities remain extremely strong that we're still in an uptrend. Analyzing the NASDAQ in conjunction with the Dow and the S&P 500, it also came back down and tested the T-line but closed up above it, keeping us in the same statistical probability that as long as we've closed above the T-line, the uptrend remains in progress. Maintaining positions in an uptrend becomes difficult for many investors because if they start seeing weakness, they want to take profits. But if they take profits too soon, when all the indicators aren't confirming, they can lose out on a lot of profitability just because of the fear factor of if they let a profit turn into a loss, boy, would they look stupid. Candlestick analysis alleviates that problem. As we can see in our recommendation on DDD, we've remained in this uptrend as long as they can't close below the T-line. The fear factor of seeing some potential sell signals but not being confirmed by the close below the T-line allows the investor to sleep well at night, eliminating that fear factor. And on the same basis, candlestick signals allows you investors to take profits when it's appropriate to take profits. Coming out of this slow curve, we had some very good profits in SIWR. It's still maintained above the T-line until today, which told us with the close below the T-line, it was time to close out this position. Having the knowledge of the very simple patterns and the results of those patterns allows investors to take advantage of big price moves at the appropriate time. As we can see in TSN, we had a slow curve with a gap up through the fry pan bottom breakout, creating a very strong price move. Now another consolidation, and notice what happens at the end of the consolidation. We have a morning star signal, which acts like a little scoop pattern with a slingshot effect to the upside. A bullish signal at the end of a flat trading area, kind of a fry pan bottom setup. Notice what what this did today. It still moved up nicely, even though the markets were relatively flat. The Japanese rice traders have provided us with prices or with signals and patterns that put us in high probability situations, not because of any fundamental research, but because of the analysis of what goes on in investor sentiment in different stages of a price trend, time after time, decade after decade, century after century. That'll be it. We'll see you in the chat rooms.